We're joined by Omar Aguilar here. He's Schwab Asset Management CEO and CIO. Thank you so much for taking the time. Now, we've talked about behavioral finance, but animal spirits, things that can drive your investment decisions purely based on emotion. How does that tend to show up in environments like this?
Well, this is, behavioral finance is fascinating and it's great. And by the way, welcome to Impact. Hopefully, this is great. In many cases, what happens is you actually have animal spirits tend to be one of the typical behavioral biases that people have when they see things going in a certain way. Herding is a typical one. What that means is that you don't want to be left behind. And that's all foundational on who are as humans. As humans, we don't want to be the ones when the herd is moving along. That's a very natural evolution part of our brain that allows to protect us for just being together with some others. So the situation related the last few years about the Max 7 is a perfect example. Everybody, there are certain companies that people didn't know existed, 5 years ago, and today they're talking about it. And mostly because everybody wants to buy in, everybody wants to go in. Another example is crypto. Everybody talks about crypto and Bitcoin and the situations that happen and how these things may revolutionize the world and everything else. Well, in many cases, when you look at the economic foundations and the financial foundations of what drives it, it just doesn't make sense. But as a human, your natural emotional piece is, I don't want to lose, I don't want to have, and that's what they call the FOMO. You don't want to be, you have this fear of missing out that is clearly a part of it. And what makes it worse is that now we have social media. And now we have social media that is in a way bombarding us with information all the time. And it's very typical. I see that I have teenagers, I have 3 teenage daughters. And it's amazing how they tell me, hey, how come we don't go to Hawaii? How come we don't have to Europe? How don't we do this? Because they see that on their friends. Right. And that's a very typical animal spirits because they only see that positive. They don't see the other part.
It's true. It's like, do you have the Hawaii money? How much planning have we done for this?
Exactly. But it's that part of like, I don't, if they're doing it, I don't want to be the only one not doing it. And that's, I think, a big part of how, investors make decisions, which in many cases could, affect them, down the road.
Yeah, Omar, a lot of folks don't even know they have these biases. I focus on retirees, and they have a fear of spending once they get to retirement. Is that a behavioral bias? And if so, what can they do to sort of overcome that?
Yes, and that's definitely the case. And there's 2 pieces that go to that. One bias that is typical is called risk aversion. And the other one is, it's it has a more scientific name, but it's more known as paralysis. And paralysis is a very typical, bias that people have as they get closer to retirement and in retirement. And what that means is that you just don't want to look at it. In other words, you've been saving money, you have money in the bank, and all of a sudden you see things that are happening, positive or negative. You don't even want to open your bank account. You just leave it alone, just hoping that things are going to be okay. And when that's happening is that people tend to be over-allocated to cash, over-allocated to short-term instruments because they're worried that they're going to lose that money. Now, what they don't know, and what in many cases the challenge is that by doing that, they're taking more risks than what they are if they were paying attention. Because in many cases, inflation, which is the biggest sources of risk for somebody in retirement, is basically dragging that if they don't necessarily are invested above the inflation. So in many cases, that idea of paralysis and not spending money is actually the same thing as not investing the money in the right places. In many situations, a big part of what advisors and others do is try to create a plan that systematically targets the income they're going to need in retirement so that they can spend what they need and they can get the income they need without necessarily having to exhaust all their money. But that step is a behavioral component where people don't want it because they're so averse at potentially losing any of their capital. And again, they don't necessarily balance all the risks together.
So to that point then, 1, how do you recognize when you're being triggered by biases? And 2, how do you counteract it? What are the strategies?
Well, that's a great question. And the answer that I have always provided over these 20 plus years I've been doing behavioral finance is that we all have biases. We are all human. There's 2 parts of the brain that interact all the time. Is the amygdala, which is the more emotional bias, which is, is what the flight to safety. It's just, who we are. Like if there's an alarm right now, our instinct will be to run away. And then there is the frontal cortex that basically allows us to just be rational. And that's the one that says, hey, we're going to be fine, we're going to allow us to do that. And both of them interact with each other all the time, and both of them can actually potentially have. So all of us have biases. Everybody, like even professional traders, even professional investors, we all have bias. What we need to do is recognize what are the biases that trigger us the most. What are the things that creates anxiety in it? In some cases, it could be FOMO. In some other cases, could be risk aversion. In some other cases, could be recency bias. If people feel that by looking at a headline, immediately they have this anxiety of like, oh my God, I got to go to my account and I got to trade. That can easily give you a sense that you may be affected by some of the biases. At Schwab, we have created a tool that we call Biagnostics. Again, it's a little bit of a marketing name, which allows you to diagnose what biases may be more common to you. And it's a combination of emotional and cognitive biases that link all together. And also we provide some techniques that allows people to just mitigate some of those biases, which is in many cases being systematic about investing, creating a program that allows us, and in many cases talk to advisors. Talk to an advisor, talk to somebody that can listen to you, especially when you have these emotional triggers that will potentially lead you to do things that may not necessarily be in your best interest.
It's certainly important to have both of those pieces in there, so appreciate you bringing that up, and I'm sure we could all check it out. Appreciate you joining us. Omar Aguilar, thank you so much.